Good morning, traders. Michael Sabo here, Senior Commodities Broker with RJO Futures on January 31st here with some commentary here in the energy markets. First, I want to get started here. If you have some interest in receiving our 2013 Hightower Commodity Trading Guide, give me a call, shoot me an email. I can get one dropped in the mail here to you, or I also have it available in PDF file. I'm more than happy to email to you. It's really jam-packed, about 50 plus pages, gives you contract specs, commitment of traders data, talks about all the major traded markets, a lot of key information in there. So I really encourage you, if you don't have one, give me a call, we'll get you one. It's got all the important economic dates in there throughout the entire year. So be sure, give me a call, shoot me an email. Moving on here, let's talk about what we've got going on here in crude oil prices, which just seem to have been moving up and away. And finally today here, we're starting to get a little bit of a pullback here. Right now we've got oil off about 70 cents here, trading around 97.25. We did break down through the $97 area here earlier this morning, but certainly we're starting to see a little bit of a weaker tone in there. Brent also a bit weaker here. We're down about 20 cents at around 114.73. Also looking at the nat gas, weaker there. We're trading around 331.80. That's off about 1 to 2 cents, and the complex a lot weaker. Take a look at that RBOB chart. What a just powerful moves we've been seeing in that market, and we're seeing that market giving back here a little bit. Here we're down a little over 4 cents here right now, trading around 299.60. Heat's off about a half a cent right now, trading around 311.15. So what's kind of going on here today? Well, certainly I think you have a more cautious overall macro tone in the market. We are seeing some major commodity groups kind of coming under a little bit of pressure here. I think a little bit of money coming off here the table. We did have, yesterday U.S. GDP data that was a little bit weaker than expected. Also, information coming out of the FOMC meeting there. They're going to continue with their asset buying program. So it's seen a little supportive to the market. GDP data a little weaker to the market. So we continue to get this basically mixed bag of economic data. I think the real important thing to look at is the inventory numbers, because let's face it, I mean, Econ 101, typically commodities move on supply and demand. And right now, let's take a look at the supply picture. We had EIA data coming out yesterday that was much higher than expected. Analysts were looking for, according to the Platts survey here, a build in the stockpiles of just over 2 million barrels. And we actually saw a build coming in of about 5.9 million barrels. So, bigger than expected build here for the prior week. And, if you take a look at our overall stockpiles, that's putting us here right around about 369 million barrels. That's the highest level we've been for this week since going back all the way to 1983. Now, let's take a look at our year-over-year numbers here. We've got about 30 million barrels more than our year-over-year numbers here. And if you take a look at the 5-year average, we're running 37.6 million barrels higher than our 5-year average. So it appears to me we've got plenty of oil out there, but yet these oil prices have been continuing to track higher. And I think a lot of that has been, the way the equities markets have been moving here. Outside markets have been very supportive to it. The dollar here has been a little bit weaker. You look at the March dollar index, we've been back trading under 80 here again. So I think that's a little supportive here to the market. But take a look at your short-term technical indicators in extremely overbought territory. So, as I've mentioned in a lot of my posts, I mean, if you've been on the long side of this market here, congratulations here. You've probably done pretty well, but you better be cautious here because, my personal opinion is I think the market is getting ready to turn lower, and I think the market's just looking for that catalyst, and it could be here. Remember, we got tomorrow here, starting here February 1st here. We're going to have the monthly unemployment, the monthly employment report there coming out. So we'll take a look and see what those numbers have. But I think there's going to be a catalyst in this market that's going to help put this market under pressure. And I think once you start to see some selling there, you're going to see some profit taking coming out of that market. I still like targeting around the 200-day moving average, which is down around 92.5. So I mean, it's given a pretty big room there for this market to potentially come down. So give me a call, shoot me an email. You want to get into more detail, we can discuss some risk management strategies. The number's on the screen, my email's on the screen. Don't forget, if you want that 2013 Hightower Commodity Trading Guide, give me a call, shoot me an email, I can get that out to you. And of course, remember that futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.